We have Kunal and Nooresh also joining us. So Kunal, to talk about technicals a bit, from 20,200 or thereabout, we have come down to 19,500. I was just looking at the chart that it appears that this time we won't respect the 20 DMA on the mid cap, small cap either. So this leg of the fall which has just started is taking along the small cap, mid cap along. Previously, small caps were very resilient.
Correct.
So that seems to have changed. Do you see this beyond expiry? This pressure could tomorrow, of course, nobody will come start buying. Maybe the next week.
Yeah, so typically what happens, Ajay, is that on the expiry day or just a penultimate day towards the expiry, if the force of selling is pretty much high, it definitely impacts the rollovers for the for the futures, both for the indices as well as stocks, starting off the next series. Only then, if we have some sort of positive data point, is where the positions start to get taken into the stocks as well as on the indices. Now the fact is that in the first week of October, we have a lot many events, global events as well as domestic events lined up. So that would probably add to more volatility for the indices. So I don't expect an immediate settling of the index, both from a near term as well as from the next 1 week perspective. I think till the time the events are not out of the way, I believe that the India VIX would probably keep on rising further. Maybe we could probably expect a 13.5 to 14 plus mark for the India VIX, and that would probably subside the index movements.
I think we're at the lowest level that we have been this series. Is that the case? Are we ending towards the lowest point?
Yeah, I think 90,500, yes.
Yeah, and that's the question actually, Nooresh, to you as well. From this lowest level that we are seeing this series, do you think now that there could be a case that the FI positioning is on the lower side, their ownership is just around that 45% mark, maybe come the month of October, we'll see a bit of a bounce back? Or is this a structural weakness which is going to take us to 19,300?
So as of now, given that today's expiry, it is tough to take a call, because if you look at the contribution today, most of the downfall, the two top losing sectors are IT and FMCG. Now, these are generally the defensive sectors which have been hit. For the last 3-4 sessions, the downtick was more so contributed by HDFC Bank, and today that is the stock which is flat. So every day we've just been seeing a slower and lower drift, and volatility in a small band. So it remains same. 19,500, 550 remains a support. So from this area, if we break it on a closing basis tomorrow, that is where we expect more weakness. As of now, at this point of time, it would be a buy at current levels with a strict stop loss at 19,500.
Sabharwal also joining us on the show. Afternoon, Sandip. Finally, the chickens are coming back to roost. Sandip, the much expected correction, do you see it play out before we can even talk about a bottom or coming back to the market or dipping our feet again?
So essentially, all of us know that from the March lows, Nifty moved up 20%, the mid-cap indices moved up nearly 35%. So after such sharp moves, corrections are imminent. Now, what will create the correction? Different things create correction. Sometimes global factors, these crude spikes, or reasons come for the correction, and that happens. So, and in the global context, we have outperformed significantly. So, although we might have corrected 3-4%, I think that's one of the lowest fall from the top for any major market. If you see the European markets, most are down 8 to 10%. US markets around 6 to 8%. Stocks in China are languishing near multi-month lows, etc. So, I think we have done relatively better, and that leaves the scope for some additional correction. So I would think that I'm not looking at a very deep drawdown, but let's say 19,000 kind of market should be a base case at which we can start nibbling in, and potentially if the global weakness becomes more accentuated, we could also fall somewhat more.
Just wanted to discuss the paint stocks as well with you, Sandip. Of course, we've got the somber news that the ex-leader of Asian Paints, Mr. Ashwin Dani, is no more. So, of course, that's one factor, and we here at ET now would like to pay tribute to him as well. The stock is also down around 4%, but not just Asian Paints, it's actually also Berger Paints which is down. But Ajay, an important name in the paints industry, who associated him with Asian Paints anonymously, yes, and a big loss.
What a name. I mean, he was an industry leader, which everybody can look up to. And the family, in fact, he joined his father's business in 68. And as a very junior level guy, exactly the classic case of how, great practices. He joined the company at a
the
very low
lowest
level, worked at the shop
Learned
floor
the
and then
ropes.
grew. And later on gave the company for kind of a professional management. But we used to meet him. I remember Nikunj and I used to meet him every now and then at the ET Awards.
Yes.
And he would be nursing his drink. And he was tell us everything about and he was very on the ball as far as the industry goes. And it is a big loss. I mean, it's just part of the life. But what an admirable, company they have built together. And a lot of people would be kind of looking up to him today. Some of the finest CEOs, I must say. The Pidilite current CEO.
Yes, Mr. Bharatpuri also
Yes,
used
he's
to
junior.
illustrate. Correct. Yes, of course. He
He
was
was a
earlier
junior.
part of the Asian
Yes,
Paints team.
you know
He's
that
worked
before
with them.
Pidilite, and they would now, say cheers and over the ET Awards. Amazing memories, Mr. Dani, of course, now not with us, but admirable company, and he leaves behind a very big legacy for sure.
Well, yes, a very big legacy, but as they say, the show must go on. And as far as the paint stocks are concerned, let me just take a view from you as well, Sandeep. The emotional factors aside, for the sector and the stocks, it seems like there is more negative news than positive, at least on the price, on the front of crude as well as what's happening to the raw material.
So I think the bigger concern for paints companies, so normally it's a oligopolistic kind of industry, so they would be able to pass on price hikes, etc. But this time, the entire spike in raw material prices is coming at a time when Grasim is making a huge entry into this segment. And to that extent, they will not have pricing power. So what will happen is that on one side, competitive intensity is increasing. Second side, you are getting hit by higher raw material prices. And on top of that, you are unable to increase prices, as Grasim obviously will try to make an aggressive entry and take away decent market share because they've invested so much. So I think it's a perfect storm of sorts, and the writing's been on the wall for some time for the paints industry. So many of these companies will again become a buy at some stage. When is tough to predict, but maybe a year from now. So I will not be looking at paint stocks at least for a year, or if these stocks actually end up falling 20% earlier than that, and at that time we can reevaluate.
Stock which is actually becoming a beneficiary of, there are two parts to it. One, capex in traditional and legacy energy. L&T is a beneficiary, especially hydrocarbons in Middle East. But Middle East now is going about putting a lot of capex in renewables, and there too L&T has a play. Today a fresh lifetime high, and there seemed to be completely defying trend. It appears that there is institutional buying wanting to position in that name. Sandeep, is there a kind of a, that moment where capital allocation was set right at M&M and it rallied from 700 to 1500? Is there a kind of a new light in which Street is looking at L&T now?
They should, because see, the fact of the matter is it's the largest EPC construction infra company of India. It's been making inroads into new segments and gaining significant orders from overseas also. And it's today sitting on a huge order book, a relatively very strong balance sheet, I would say, much stronger than it's ever been, and it doesn't have debt issues at all. And out of the asset ownership business, where many companies have got trapped into BOT, etc. So, and it's an underappreciated stock. So even at these highs, if you actually look at fund portfolio, so you'll see that relatively ownership of L&T has gone up, but still most funds, top large cap funds, are dominated by HDFC Bank, ICICI Bank, Infosys, TCS, ITC. So I think that's how the top holdings go, while the best performing sector actually is capital goods. So I would think that if the markets weaken significantly, L&T will also correct. So I think that will give people who haven't allocated to allocate. In our large cap portfolio, this is the biggest holding.
Holding when it comes to your large cap portfolio, and that's L&T for you. So that's a big news maker today. Just wanted to quickly highlight a couple of other news buzzers. Medanta is in focus because Motilal Oswal has initiated coverage with a buy. The target is 840 rupees. They're on track to scale up their capabilities at Patna and Lucknow, and that's the reason the sales are expected to grow at a rate of almost 15% over the next 2 years. The other one is MCX, of course. The new derivatives platform will finally go live on October 3rd. This is something we have been tracking here at ET Now very closely and had told you that this is likely to happen in October itself. In fact, we spoke with an analyst today, Amit Chandra of HDFC Securities, to understand the implication and why there is this excitement about a new software coming on board. What could be the EPS upgrades and the impact on the P&L? Listen in to what he had to tell us.
You see the price correlation to the volume, it has been around 55% over the last 10 years. This correlation has come down to 12% in the last 3 years because of the uncertainty around technology. So I think with in the last 6 months, the option volume has almost doubled. And if you see YOY, the option volumes have been 3x YOY. Okay, so the impact of the higher volume will start to reflect in terms of revenues. And we are expecting around 47% CAGR in terms of options revenue from FY23 to 26. So, in terms of our estimate, we are expecting 15-16% growth in terms of the total revenue on a normalized basis.
Sandip, I wanted to ask you, today, as I say, overnight, Morgan Stanley put out a note in US saying that this rising yields and dollar rally would actually be very disadvantageous for emerging market stocks. You've seen all of this play out, the kind of relationship overseas cues, global macro cues have with Indian stocks for a very long time because of flows. 15 years back is when US yields shot up to those levels. How vulnerable are we now? Or you think drawing previous historic example may not be apply anymore and we are much more robust?
Specifically for India, we are much more robust. If you look at our forex reserves, if you look at our overall trade or current account deficit vis-a-vis what forex reserves we hold, our entire inflation dynamics vis-a-vis what used to be there earlier, I think things are totally different. Secondly, these broking house come out with reports at the peak of the cycle. Now, the dollar has been rallying for so many months. The bond yields have been going up for so many months. So now, when we might potentially be at a threshold where there could be a potential reversal or from, let's say, the US 10-year bond yields from around 4.75%, they could actually be looking to reverse. It makes sense coming out with such reports.
Sandip, but time now to slip into a very short break. But